G'day folks, Jim here from FX Charts. Hope you're going well. Thought I'd do a quick video to start the week for the outlook of the dollar. It finished a little bit weaker on Friday once the Ukraine-Russian tensions seemed to escalate somewhat, and the headlines there pushed US bond yields lower, which that flowed through to the dollar. And the main beneficiaries were the yen and the Swiss franc, which acted as a safe haven. So all up, it was a fairly choppy session. It wasn't really all that directional, but the dollar did look a little bit heavy, and it looks to me as though we could be in for the same, at least early in the week. Although the main focus of the week is going to be Fed watching. We've got the US inflation numbers on Tuesday, and then of course we've got the FOMC minutes on Wednesday and the Jackson Hole economic symposium on Friday. So we'll go and have a look at the charts here. And we'll start off with the euro. Now, as we can see, the euro, this is an hourly chart. It is pretty choppy and somewhat directionless. It's not doing an awful lot. It finished at around 134 on Friday. It's a little bit lower than that this morning. But the 4-hour charts look as though they could be building up some slightly positive momentum. There's some minor resistance here at around 134, 10.15. And if that gets taken out, we're going back up here to about 134.30, at which point we're sort of heading into some FIBO resistance. But it does the dollar does look as though it could stand a little bit of pressure. And adding to that, the dailies vaguely look as though they might be having but pointing a little bit higher. I don't think we're going anywhere too far. If we come back to the shorter term charts, the hourlies here, as I say, this is about 134.30. We've got support on the downside here at about 133.70, and then this double bottom down here, that's quite important, down around 133.35. Now my own view is that further out the dollar is going to find its legs again, and I think, you know, as long as this downtrend doesn't get broken too aggressively, I think eventually we're going to head back down here. This is quite important support down here around 132.5, and below there we could eventually get back down towards this 127. This is 127.54 here, and that's the longer term outlook. But I don't think we're going there anytime soon. And the move overall is going to be very choppy and very slow. Geopolitics are going to be the main driver of it in the short term, but further out, it's going to be the US interest rate outlook. Aside from the Fed this week, we've also got the global PMIs, and the EU PMIs are not looking as though they're going to be that good. So that could put a cap on the euro and send it lower once again. But for the meantime, I think this 133.30, 5.40 is going to support it. 134.15, as I say, will be the initial resistance, and then 134.30. But if we break above that, then we could squeeze a bit hard towards 134, sort of 60, 70, somewhere up around there. Above 135, I think then we probably might motor a little bit higher. The markets is very short, the euro, and we could see some stops getting squeezed. Moving along to dollar yen. Well, that squeezed higher on Friday before a sharp sell-off. Once the Russian headlines hit the news, there was some safe haven demand for the yen. Since then, it's chopped around a bit. I won't go into the yen too much. I mean, essentially, we're trading within a 102, 103 range, and have done for quite a while. I think that's probably the likelihood for the foreseeable future as well. The dailies, as you can see, are fairly flat. They're not suggesting an awful lot. I still prefer to buy dips in the dollar, but realistically, I think there are better things to look at. Cables opened higher this morning. We've seen a gap higher after Mark Carney spoke over the weekend. There was a Sunday Times interview, and he suggested that he won't hang about on raising interest rates and wait for wage growth to show some strength. If necessary, he'll raise rates ahead of that. So we've seen a bit of a gap up. I'm not sure how far we're going, but the momentum does look to point higher. London might drive it a bit higher once they get in. But we have got a gap back down here, sort of 30-point gap down about 166.90. In the meantime, it looks to me as though we could we could head up towards this sort of level here, about 167 sort of 80 or so, where it would hit the top of the descending trend line and probably see some decent selling again. Further out, the trend does look to be lower, but the cable is supported down here by the 200-day moving average. That's at where about 167.50, I think it is. Yeah, so that's going to provide good support. But as I say, the trend does look low, and if we can break down through this FIBO support, then we could sort of start to head back down here towards this sort of 164.5. But that's some way off at the moment. So right for the time being, it could well be that we have a bit of consolidation with the top side resistance at the 100-day moving average. That's 168.80, but that's some way off. Eventually, I do think we're going to break down below the 200-day and probably through this FIBO support, but that's not likely to happen today, I don't think. Dollar Swiss, that took out some important support here on Friday. The Swiss saw some decent demand. Swiss franc saw decent demand, I should say, and it took out this minor support here. It's still above the rising trend supports, both of them, the shorter term and the longer term one. It looks to me as though it's going to remain fairly choppy. The 4 hours are pointing lower, but they may be trying to recover a little bit. The dailies have just, well, we've got a bit of a rounding top here really, and we may come down and test this again, this rising trend line. But ultimately, as with everything else, I think eventually the dollar's going to show its legs again, and we'll head higher. But 90, this 90.85, 91, the figure, it's very sticky, and it's struggling to get through there. We did get up to 91.15 the other day, but that was very brief, and it looks to me as though we're probably stuck fairly range bound. Wait for the CPI tomorrow, the US CPI, because that'll give us some direction for the dollar. The Aussie is reasonably well bid, but it's remaining, I should say, underneath the rising trend resistance. A break of sort of 92.30 would take us a little bit higher and possibly back up to this 93 3/4 high eventually. I still prefer to look for levels to sell into. The dailies, well, they actually are looking, well, they're reasonably flat now. They have been pointing low. They're trying to recover, but I do think eventually we're possibly going to tip over again, and we are going to head to the downside. Now 92.60 is very important. If we or 92.5, 92.60. If we get below there, then we did spike briefly down to this 92.39 low last week. That's going to see some decent bids. But under there, we could quickly head back down towards sort of 92, the figure, and possibly a fair bit lower. The pivot, the red line pivot here, if that does give way on a daily closing basis, which it has yet to do, as I say, it's around 92.60. Then I think that could be the catalyst for the Aussie to head low. But until then, it is well supported, and if the geopolitical scene remains reasonably calm, the market's going to go back and look for yields, so that could underpin the Oz for the time being. The Kiwi, well, it's tried the downside and so far failed. Now it's come back to sit above the rising trend support and the 200-day moving average. For the time being, it's looking reasonably well underpinned, and much the same applies as with the Aussie. As long as things that remain reasonably calm politically, then the market will look for yield, and with Kiwi rates being at over 3% now, you know, we could see the we could see the Kiwi stay in demand. I don't think it's really going too high, but the 100-day moving average is up here at 86, the figure. We could potentially see a squeeze up there over the next couple of days. I don't really think so. I'd still like to sell into it. Eventually, I think we are going to head to the downside, take out this recent low around 84.10. I think it was 84.08. And if we do take that out, which is kind of a double bottom there, then I think we will accelerate to the downside and down to around sort of this 82.70. That's some way off at this stage, and in the short term, I think we could probably just gyrate between this sort of 84.5 to 85.20, maybe up to this high here, about 85.35. That was up there. So that's about it on the Kiwi. I'll just show you the dollar index, which this is the dollar index here. Now, having had a decent ride higher over the last couple of weeks, the dollar index has petered out here at 81.70, and it's come back to sort of towards this 81.40 level. Now, I think this line here and the rising trend line here, they meet at about 81.10. We could easily see it back down there, in which case I think I'd be a buyer of dollars. I wouldn't want to see it much under 81, the figure, though. That could be the prelude for some deeper sell-off in the dollar, taking it back down to around this sort of 80, 50, 60 area. I don't think that's the case for the time being, and as I say, I prefer to buy dollars. The only thing that worries me is the MACDs have turned slightly lower, not aggressively so, and it may be that we're just going to have a period of consolidation. But it does suggest that the dollar could see some mild weakness at least early in the week. Further out, if I go to the weeklies, we'll just take a second. The MACDs here are still pointing high, and that gives me confidence that the dollar has not finished its final run higher. So, as I say, I do prefer to be a buyer of dips. So that's about it today. As I say, Fed watching is going to be the main game this week. CPI tomorrow, FOMC Minutes on Wednesday, and Jackson Hole on Friday. Elsewhere, we've got the global the global flash PMIs with the EU on kicking things off on Thursday. And if they're weak, that could see the euro come back under pressure. We've got there's a fair bit of UK data out. We've got the CPI on Tuesday, the Bank of England minutes on Wednesday, and retail sales on Thursday. So we could see a fair bit of activity in cable. The Aussies got the RBA minutes, and if they're slightly more dovish than expected, we could see the pressure come back to the downside on the Aussie. And we've also got the HSBC flash manufacturing PMI on Thursday about lunchtime Australia time as well. So that could be a bit of a driver. And as far as the Kiwi is concerned, we've got the highlight this week will be the RBNZ inflation outlook on that's on Tuesday, I think. So that's about it for today. Have a good week's trading, and we'll talk to you next week. Cheers, bye.